Hello everyone, I hope you are all healthy and safe. First of all, I would like to send my thanks to TIDE for this fantastic and well-organized event, and we are really happy to be a part of it. My name is Hakan Ohan, as introduced. I am Head of Tax Controversy Services and the Partner of Tax Compliance Services in KPMG Turkey. So welcome to our panel with the subject of Global Tax Landscape, Overview and Future Trends. I will moderate the panel, and with me I have very valuable KPMG partners who are experts in their fields. Chris, as explained, are head of our tax and legal services of EMEA region, and besides his leadership role, his current focus is supporting companies redesign and imagine the future of tax operations. Rodney Lawrence is global head of international tax, and Rodney provides international tax consulting services to large multinational companies in terms of solving cross-border issues, managing risk, and planning opportunities. Rai has been consulting in various M&A and inbound and outbound investments. And besides her coordinating role, Nilgün, she focuses on helping the local clients in optimizing their operating functions. So I would like to say warm welcome to both of them. Perhaps the special thanks should go to Rodney because it is about 5 a.m. In the morning in Chicago. So thanks again, Rodney. And let me check the slides. In our panel, our aim is to figure out what are the key trends in the global tax agenda and their reflection on local rules and actual and potential effects on business. We will mainly discuss this from three main perspectives. The first one is global tax policy agenda and what are the global trends. There are changes in goods flows, service flows, money flows, human capital flows, and even technology and information flows. Protectionism is increasing, digital economy is booming. Can conventional tax rules follow these changes? Are BEPS actions enough? Besides, we have new trends such as social responsibility and ESG. What are the effects of these on taxation? And what should you expect after pandemic? We will focus on the answer of these questions. As second topic, we will search for what are the approach of tax authorities to these developments in terms of tax audits and tax risk, and of course, dispute resolution and arbitration. We also observe that thanks to digital technology, digital compliance and real-time data filing is becoming more common. Lastly, given the changes in tax policy and tax authorities' approach, should we expect a change in risk management and operation models of tax departments? In other words, what will tax function will look like in the future? What is the effect of automation and the digitization? Of course, each topic is too complex and we can discuss any of them for many hours. However, rather than getting into details, we would like to create an awareness and high level of understanding. At the end, we will have a short Q&A session. However, if you have further questions, we will provide our contact details so you can get in touch with us. Of course, you can get in touch with TIDE. So, Rodney, I would like to ask you first. The world is changing rapidly in terms of many measures, and pandemic also accelerated the change. The tax policy, of course, inevitably cannot be out of this picture. Would you please let us know from your tax perspective, what are the key items in the global tax policy trends? Thank you.
Well, thank you, Hakan. And let me just say, it's so nice to be with all my colleagues here today, and I'm looking forward to a really interesting session. So I've attempted to bucket for our friends in the audience global trends into 5 key buckets. And I was thinking about this in the context of what would everyone here be most interested in as they assess tax exposures that are coming about as a result of these trends. So the first bucket is in the area of protectionism. That is, what are countries doing? What are we observing that is increasing tax costs in country overseas? So outside Turkey in this case. Next, transfer pricing. What are we seeing in terms of tax authorities seeking to increase or change profits attributable to countries, meaning additional tax expense? Next, a big one, taxing the digital services space. As businesses increasingly digitalize, countries are more and more increasing VATs and direct taxes on those cash flows to increase taxes. Hakan, you mentioned social responsibility, the notion of increased transparency, green taxes. And then finally, we're seeing a real trend in the area of fiscal policy expectations now that every government has spent significant sums on COVID support. So that's the 5 buckets. Let me just pick a couple of those to talk with you all about today. And let me start at the top, protectionism. Duties and tariffs. When we think about assessing tax exposures, sometimes we forget about that, but those can be really significant. And what we're seeing more and more is that countries are using tariffs increasingly to protect their labor base and change trade policy. The consequence of this trend is increased cost above the line. So this hits profits. And we see it all over, Hakan. We see it in the United States with President Trump and the trade tensions with China. We see it with Europe. We see it with Australia. We see it across Asia and even Latin America. So as we think about a trend, we increasingly see more and more countries focusing in on duties and tariffs as an area of exposure. And oftentimes tax departments are just not thinking about that because they're thinking that is being handled by the business. So I'd definitely start with that as a trend. Picking another trend, the denial of deductions to non-residents. Increasingly, we see tax law change such that when you assess your tax exposure in a country, you can't just multiply book income by the statutory tax rate and get close enough to the tax exposure. Many countries are just adjusting their rules to just plain deny deductions. A great example would be the US and BEAT, but we see other countries, Mexico, countries in Africa, countries in Asia, doing the same thing. So increasingly, as we think about a trend, book income is not a good proxy for taxable income and the potential tax exposure in a country. And let me just pick one more, and I know we'll come back to it, but harder to use treaties. Now, for our colleagues in the audience who may not be familiar with treaties, these are agreements between countries that reduce tax liabilities in a source country. Countries increasingly are saying that tax treaties cannot be used to reduce tax, where a principal purpose is just that, reducing tax. So we're seeing it harder and harder to access treaties. So Hakan, those would be my top 3, I think, trends today.
Thank you, Rodney. It's very helpful for us to see the big picture. Eray, I would like to turn to you. What about Turkey? What is the approach of Turkey against these global changes? Do you think there are material effects to the business?
Well, thanks, Hakan, and good afternoon, everyone. This is Eray Büyüksekban. I'm the International Tax Leader at KPMG Turkey. Certainly, as part of the globe, these global trends are having significant impacts in Turkey. Maybe some of them are currently being observed, and some of them will be on the top of our agenda in the near future. If we go to the items that have already been summarized by Rodney, I think the very first thing that we should be talking about is the protectionism. So, and looking at the items one by one, I think we should be discussing a few minutes about the MLI. So, the MLI is not yet in place, and that is why we have not yet started to observe any kind of impacts of it. But on the other hand, we are well aware that the principal purpose test, which is the key focus area of the multilateral instrument, is going to be making us very busy in the near future. And I know that we all know that the Turkish tax authorities have been very aggressive in the past, just referring to a local article in the Turkish Tax Procedural Code. And with the enactment of MLI and with the coming principal purpose test, I think they will be going much, much more aggressive. In addition to that, we have already started discussing the MLI impacts, although not yet in place yet. The very first thing that we are very often discussing nowadays is the Dutch double tax treaty. In particular, whether the Turkey will be insisting on choosing option C as a matter of reducing the double taxation, eliminating the double taxation, which will end up with an ultimate result that the Dutch double tax treaty's very famous and very widely referred participation exemption will be lost. So, I mean, the MLI, although not yet in place, has at least started shaping our discussions with our clients already. This is what we are facing. Yes, digital economy, how to tax it, is going to be a very important matter. We are yet at the starting phases of it, like we are talking about the withholding applications, we are talking about the digital service taxes, and we are trying to position ourselves in taxing the digital economy, yet with a lot of gaps, without very clearly defining what our objectives are and what our conclusions are. But on the other hand, especially with the discussions on Pillar 1 and Pillar 2, likewise in many other countries, Turkey will be quite often discussing this. And maybe lastly, it's sort of a protectionism, but maybe we should call it some like transparency, although, I mean, it's been on the agenda for some years. The impact of the automatic exchange of information between the countries. Turkey is now about to be a part of it, starting from this year. It's going to be a very huge agenda item. So yes, Turkey has made lots of investments abroad, and the investors have enjoyed many tax advantages up until now. And the big question is, where are we going to stop? Whether the tax advantages will be continuing or whether we will be deprived of some of them. And around transparency, around protectionism, I think we have lots to discuss. I don't know, Hakan, if it was a good summary at all.
Yeah, thank you, Eray. It was also very useful because there are some global changes, but we need to see the local reflection, and I think you did a good summary. Thank you for this. Rodney, I again would like to turn to you because I understand that these changes are affecting the business. I am wondering about the approach of tax authorities. The transition periods always include uncertainties, which means disputes. Are they increasing? Are they specific areas which tax auditors frequently challenge? And as a reaction, what are the developments from dispute resolution arbitration side? Thank you.
Well, thanks, Hakan. And I'm going to pick up on a couple of comments that Eray made, because those are relevant in Turkey and they're relevant around the world as well. Look, the reality here is that post-pandemic, governments have realized they've spent a lot of money supporting businesses, a lot of money supporting employment. They don't want to look uncompetitive by raising tax rates, but they need to find another way to raise cash taxes. We're seeing that happen in the area of tax examinations almost everywhere. Now, I've tried to bucket this for our friends into the 4 big areas that we think about when we think about the most common tax examination issues. Transfer pricing, of course, which is the allocation of income between countries. Taxable presence. You can think about this in the construction industry, for example. A lot of focus on not having a tax presence in the other jurisdiction, so you don't need to deal with compliance and related cash taxes. Ere mentioned the multilateral instrument. I'm going to come back to that in the denial of treaty benefits, but whereas it may not yet be enforced, we're seeing countries apply it already, and I'll talk about that. And then finally, APAs and agreements. Oftentimes, we think as taxpayers that if we have an APA, an advanced pricing agreement, or a tax ruling, we're safe. We've got agreement. That's not necessarily true. So let me pick up on a couple of those. Transfer pricing first, because that really is key. There is a almost uniform focus on intercompany charges and profit elements, but also, and more significantly, many tax authorities are pushing back on businesses that say that their activities in the country should only attract a limited return, cost plus, say, or something like that. Increasingly, and consistent with the BEPS agenda that Ere mentioned briefly, tax authorities are taking the view that that is not an appropriate way to allocate income to their jurisdiction. So what? Well, the so what is that means increased tax expense in that jurisdiction. So transfer pricing is the first place we see tax authorities going. Taxable presence next. As I said, particularly in the construction industry, it's been very common to structure operations in different entities so that no one entity had a taxable presence in a foreign jurisdiction. Many tax authorities are pushing back on that, using principles in the multilateral instrument to aggregate entities to create a taxable presence. So as we think about tax exposures in a tax examination, we need to be looking at not just the single entity, but the entire group and what the entire group is contributing to economic activity in that other country. So Ere mentioned the denial of treaty benefits point and how that's evolving. So let me just tell you, as a practical matter, in many countries, not the United States, who has not signed up and will not sign up to the MLI, but many other countries, think across Asia, think across Europe, think Latin America, like Mexico. And I'll use Mexico as a great example of this. Tax authorities are already using the principles of the multilateral instrument in tax examinations. And again, so what? Well, they use the principal purpose test that Ere mentioned to say, well, if the principal purpose for using a tax treaty is to reduce cash taxes to lower than they would be if there wasn't a treaty, if that's the principal purpose for that, for the use of that treaty, you just can't use it. That's increasingly a common position that tax authorities are taking. And so when we think about tax exam, we need to be prepared that whereas in the past we felt we could use treaties, we may need to defend more forcefully our right to use treaties. And then finally, the reliance on APAs. And I'll just leave you with the recent case in the United States, Coca-Cola, where the IRS said, just because you had an APA doesn't mean that we're bound by it. So as we think about reliance on tax agreements, we need to make sure that we still fit within the facts of those agreements and that we can continue to rely on them to manage our exposure. Hakan, I think those would be the big four buckets on the global scene.
Okay, thank you, Rodney. And as tax controversy leader in Turkey, I would like to comment on the main international tax-related disputes as of now in Turkey. It's correct that MLI is not in effect, but we see that the tax auditors has already started to be affected from BEPS. And there's an increasing interest of tax auditors to international taxation concepts, because tax is not a written document, but it's the philosophy, and it seems that tax auditors will start to use it. At the first sight, we have anti-avoidance and treaty shopping. in Turkey, we generally face with dividends on this case. Let me give you an example. Let's assume a multinational group has a subsidiary in Turkey whose ultimate parent is country X. And however, the direct shareholder is in country Y, where Turkey has a tax treaty which provides more beneficial dividend withholding rates. If the company in country Y, holding company in country Y, has some substance problems and the dividends are directly transferred to the ultimate parent, the tax auditors argue that the holding company in country Y isn't the beneficial owner, so the beneficial rates in the tax treaty cannot be applied. So we have been facing with those kind of challenges in the current audits. And besides, we have more aggressiveness in tax permanent establishment issues, which Rodney presents as a taxable presence. Firstly, tax auditors are more aggressive in considering the representatives, the agents, even sales facilitation service providers as the permanent establishment of the principal abroad. And secondly, the tax auditors have the tendency to consider the servers or other similar electronic vehicles as the digital PE, although it is not in the legislation or in the tax treaties, and try to give taxation right to Turkey. At the transfer pricing side, as also Rodney focused, we have four main items. The one is the intercompany group charges as the management fees. The tax auditors would like to test whether there's an actual service rendering, whether the local company really needs the services, and as a third, whether the fee is arm's length or not. But this is not an easy test. So the tax auditors simply recharacterize the nature of the service charge, and they simply say that it is a know-how transfer, so it is an intangible payment, so should be subject to 10% withholding. We see those kind of challenges very frequently. And the tax auditors also control the royalties. They check whether the royalties or the intangible value has a positive impact on the derivation of commercial income. And they also check whether the rates are in line with arm's length principle or not. And on the financial transaction sides, the tax auditors really control intensively the arm's length nature of the interest rates. And what is new, they really check if there is a loan guarantee, they check whether there should be a arm's length commission or not. And as a fourth item, not in the slides, the tax auditors really has the tendency to deny use of transactional net marginal method, but would like to use comparable uncontrolled price method in their assessments by using secret comparables. And the Turkish tax court's approach is not clear as of now for the use of secret comparables. And another item that we can say is that the tax audit board in Turkey has more focus on using technology and centralized approach. We have central risk analysis system, and most of the companies and the issues are selected by this system and assigned to the tax auditors. And the tax audit board also developed VEDAS. It is tax audit analysis software, and they would like to make most of the tax audit analysis on this system. So the government is also trying to change its tax approach by using central mechanism or technological vehicles. So this is from my side. Now I would like to turn Chris. Chris, I generally see that tax departments are under pressure. So how are tax departments facing into these challenges? Are they changing their risk management approaches or operating models? Would you please elaborate on this?
Yeah, thank you, Hakan, and hello, everybody. I can certainly agree with you, Hakan. Tax functions today are under enormous pressure. I mean, you, Rodney, Aray, you've talked about the fast-changing and increasingly complex world of international tax and relationships with tax authorities. But there's a lot else that tax leaders are having to contend with. So to take a couple of examples, tax authorities all around the world are increasingly implementing digital compliance models, which is requiring new technological approaches by tax functions within business. It's requiring a lot more data to be reported to tax authorities about a company's business. Another example is just how tax functions support their business colleagues in execution of their business plans as businesses deal with the current difficult economic environment, some of those trade tensions that we've talked about. They're expecting real-time, proactive, relevant advice from their tax function. So they have to plan for that as well. So when you put that all together, Hakan, I think we can say without doubt that tax functions have never faced greater pressure. The businesses they support have probably never faced greater financial and reputational risk from the management of their tax affairs, and there's more on the agenda than ever. So as you ask, what are they doing about it? Well, I think what we're seeing, and this really is a hot topic now, is that tax leaders have come to the realization that the way they have managed tax for their businesses in the last 10 years is not going to work for managing the tax affairs of their businesses in the coming 10 years. The world is going to look very different for tax in the next 10 years. So they've realized that they need to take a step back and ask themselves, what does the future look like for the management of tax? And as we put it here on this slide, they're reimagining what their tax function will look like in 5 to 10 years' time. And then they're building a plan to get there. So we've got a framework here of the sorts of thinking that tax leaders are going through. So, the place to start is to ask yourself, where will your business be in 5 to 10 years' time? Because that's who you're supporting, of course. So take an example. If your business is looking for international expansion, what countries are they going to move into? Do you have the resources to support them on the tax issues around any acquisition strategies? Do you have the tax skills in those new countries that your business is moving into that perhaps you have not had to advise on before? So you set your tax strategy within the framework of the overall business strategy. And then you ask yourself, well, what do I need to do to deliver on that strategy? So where am I going to get the resources from to do the work that I need to do? And lots of different options are opening up in that area. So what is the balance that you're going to strike between what you do in-house and where you rely on a trusted advisor, for example? So we're seeing a rise in global outsourcing contracts where a company works with one global provider to deliver their compliance matters around the world, because they recognize the global providers have the resources to do that, where the company may not have those resources in-house. But you can also look at onshore versus offshore resourcing. So lots of companies are developing shared service center type models for the finance functions. Can tax leverage those lower cost resources for the more routine activities that we undertake as tax people? So where do you get your resources from is an important question. Then looking at how you get the work done that you have to get done. So are your processes fit for purpose? Are they efficient? Are they enabling you to comply with the tax legislation, especially in these new areas? And just to take one example there, I mentioned the rise of digital compliance systems where tax authorities are requiring lots more real-time reporting of lots more data. Most companies probably don't have processes in place to handle that, so they have to create new processes. They have to develop a strategy around the management of their company's data so that they minimize the new risks that are coming from that increased real-time sharing of data with tax authorities, who of course are going to look at it to see if they can identify any areas where tax is underpaid, and have a debate about that in the way Rodney and Array laid out a bit earlier. Think about your technology strategy, which is going to enable a lot of these processes. Of course, that drives cost efficiency, but this is probably the first time tax departments have had to think very clearly about the investment they need in technology and where are they going to get that from, and how do they make business cases to their business leaders to get that investment in the technologies that they need. And then finally, thinking about the overall goals and objectives of the tax function. How do they demonstrate the performance and the value they're adding to the business? There's many different areas to that, and some are mentioned on the slide here. But having much greater clarity around the goals you're trying to achieve in the next few years, of course, is going to make you better placed to get the resources and put in place the strategy that you want, and get the agreement to that from your business leaders. So to come back to your question, Hakan, yeah, lots more pressure. I think new financial and reputational risks are out there that we have to handle. And you know, what we see quite clearly is tax leaders around the world thinking they need to take a step back, think holistically about the challenges ahead of them, and build a tax strategy and operating model that allows them to manage those risks whilst delivering value to their business colleagues.
Okay. Thank you, Chris. I think it is really interesting, and I understand that the tax functions will look different in the future, and this is the future. And Nilgün, I would like to ask you, where is Turkey in this picture? What are your main expectations for the future on this topic?
Thank you, Hakan. Thank you also, Chris. Yeah, I can say that the tax teams in Turkey also needs to consider similar global trends as Christopher mentioned when managing important risks. The tax regulation in Turkey is constantly changing, as you already mentioned, and we are facing new taxes such as taxation of digital economy and recycling contribution fee as an example. And increasing compliance requirements as a result of new regulation is putting more pressure on the tax teams. On the other hand, tax authority is investing on digitalization, and as you may also follow, tax authority tends to expand the applications of electronic like e-ledgers, e-invoice, e-archive invoice, by lowering the relevant criteria. By this way, the tax authority has direct access on the financial data and using data analytics to analyze the big data on hand. I can say that in this digital environment, tax authority is able to compare and cross-check the correctness and completeness of data on hand from different sources. So tax inspections are getting more easier for the tax authority. And also, I can say that in the new reality, the business strategies are changing, and companies must consider the tax impact when they are determining their new strategies and designing new products or processes. And tax teams must align the tax strategy with the business strategy and also provide insight to the company management regarding the risks, tax risks, and also tax benefit opportunities. And the tax teams are trying to catch an optimum balance between digitalization and using the human power, and they need to reallocate their department resources from routine tasks to value-added tasks. And we also observe more companies in Turkey analyzing the current state of their tax function and working on their target operating model, as Chris mentioned, like organization model, processes, risk and control infrastructure, and the technologies used. When designing the target operating model, we believe the usage of technology is one of the key aspects. We see tax teams also started to use new technologies such as robotic process automation, data analytics, or dashboards for data and process visualization. And the main purpose of using technology is managing the compliance risks, actually, where the company may face penalties, interest, potential reputational risks in case of any incompliance. And the other reason is increasing efficiency and reducing the tax-related costs, where high resource consumption in day-to-day operations may increase the operational costs, and also enough time for the analysis and insight providing cannot be allocated due to manual work, actually. And the third is aligning with the business and not missing incentives and tax benefit opportunities. As a summary, I can say that the tax functions without the appropriate target operating model or professionals without appropriate technological skills may face serious compliance risks as well as operational costs in the future. Yeah, this is the summary from Turkey.
Okay, thank you, Nilgün. We have Q&A session, but before getting into Q&A side, the Chris and Rodney, I know they have another conference that will start in a few minutes, so I would like to thank to them. I know they are very busy, so it is very kind of you that you participate your time to this. Thank you.
Not at all. It's been a pleasure, Hakan, and very much enjoyed it, and wishing everybody a very happy holiday season when they get to it. Thank you.
Thank you.